Welcome back to Factful Finance, where we break down the numbers to help you make smarter financial decisions. Today, we're tackling a topic that's got a lot of people talking: cryptocurrency. Is it worth it? You've probably heard the buzz, seen the headlines, and wondered if it's a worthwhile investment. Well, let's break it down from a personal finance perspective. Before we get into the nuts and bolts of crypto, let's set the stage with a reality check. Did you know that 87% of Americans don't own cryptocurrency? That means the majority of people are still sitting on the sidelines, unsure if they should dive in. But why? What's holding them back? And is it all just hype, or is there genuine financial potential here? Now, let's be clear, this video is for educational purposes only. Always consult with a professional for advice tailored to your situation. So, what exactly is cryptocurrency? It's a digital or virtual form of currency that uses cryptography for security. Bitcoin, Ethereum, and newer coins like Solana or Dogecoin are popular examples. While cryptocurrency has certainly made headlines in recent years, especially with some people making a fortune, it's still a volatile, often unpredictable investment. The potential for high returns is there, but so is the risk. Let's start by looking at the pros. First off, crypto offers a degree of diversification. For those who have traditional assets like stocks or real estate, adding crypto can spread your risk. Diversification is a well-established principle in personal finance. The more varied your investments, the less likely it is that any one market crash will devastate your financial health. In other words, crypto can be part of your overall portfolio, but it shouldn't be the entire thing. Second, there's potential for high returns. Yes, it's true. Bitcoin, for example, skyrocketed from around $1,000 in 2017 to nearly $68,000 at its peak in 2021. That's an incredible gain by traditional investment standards. But let's keep things grounded. Cryptocurrency can be unpredictable, and you must be prepared for fluctuations. Just because it's shot up before doesn't mean it will continue on the same trajectory. It's a high-risk, high-reward game. But let's also talk about the cons, the other side of the coin. First, there's volatility. One day, Bitcoin is up 10% and the next it's down by 30%. This unpredictability makes it a poor choice for people with short-term financial goals or anyone who isn't comfortable with risk. It's also highly speculative. Cryptocurrency doesn't generate earnings like stocks do through dividends or interest. Its value is driven by speculation, trends, and demand, which means it can swing wildly. Another issue is regulation. Cryptocurrency is still in a regulatory gray area, which means governments around the world are grappling with how to tax it, whether to ban it, and how to protect investors from fraud. Right now, crypto is largely unregulated in many countries, but that could change rapidly. The risk of your investment being impacted by new laws or government action is something to consider. Now here's a real-world example. Sarah, a 30-year-old with an established 401k and a growing emergency fund, decided to put 5% of her savings into cryptocurrency after doing extensive research. She's aware of the volatility, but is prepared for long-term holding. On the flip side, Tom, 55 and close to retirement, decided to put 25% of his portfolio into crypto because he saw headlines about massive returns. Fast forward 2 years, and while Sarah's crypto has seen some dips, she hasn't lost sleep over it. Tom, however, has seen a big chunk of his portfolio erode after a sudden crash. He wishes he had balanced his risk more carefully. This brings us to strategy. If you're interested in crypto, don't put all your eggs in one basket. Financial experts recommend no more than 5 to 10% of your portfolio in high-risk investments like cryptocurrency. And, as with any investment, make sure your emergency fund is fully stocked, your debts are manageable, and your retirement savings are on track before diving in. If you're just getting started with crypto, consider using a crypto exchange like Coinbase or Binance to make your first purchase. And if you're looking for a more secure option, consider using a cold wallet for storage, which keeps your coins offline and protected from hacks. But is crypto for everyone? Absolutely not. If you're someone who values stability, has a low risk tolerance, or is looking for predictable returns, crypto might not fit into your plan. But for those willing to take a calculated risk and diversify their portfolios, it could serve as a small but impactful piece of your investment strategy. So, is cryptocurrency worth it? The short answer? It depends. Crypto can be a valuable tool for diversifying your portfolio, but it's not without risk. Be sure to do your own research, consult with financial professionals, and never invest more than you can afford to lose. What's your stance on crypto? Are you ready to take the plunge, or do you think it's too risky for your personal financial strategy? Let me know your thoughts in the comments below. If you like this video, don't forget to hit the subscribe button so you don't miss out on future videos that'll help you make smarter financial decisions. We've got a ton of great content ahead. Check out the video on the screen next. It could really help you fine-tune your financial goals. Thanks for watching, and I'll see you next time.